Hello. Today's our lecture is about capital gain tax, and in this chapter, we will cover chargeable and exempt assets. We will look the rules for um, chargeable gains and allowable losses, and disposal rules, chattels, and wasting chattels. And the remaining topic shares and private residence relief and the bonus shares and right shares we will cover in our next lecture. So let's start. So the capital gain tax is a charged when a chargeable person makes a chargeable disposal of a chargeable asset. So let's see the template for this chargeable. Um, so the thing here is chargeable and exempt asset. There are few assets which are exempt from capital gain tax. For example, cash, shares in ISA, motor, cars, private vesting shares. Vesting shares are the shares which have life less than 50 years. Other shares bought and sold for less than 6,000, we will cover this one. Animals, horses, anything. National saving and investment certificates, bonds, medal awarded for bravery, betting and lottery winnings, compensation or damages for injury or harm. All these are exempt from capital gain tax. A chattel is a tangible movable property. The most popular types of asset disposed of in assessment are shares, antique chattels such as painting and furniture, and land and buildings. You must be familiar with the basic computation for calculating a capital gain on capital loss. So here is a template that we will use in our AAT assessment. So in your exam, if you get this question, you have to make sure before calculating again, make sure the asset is not exempt from capital gain tax. We have already seen the list of the exempt assets on the top. So here is a template. Disposal proceeds less incidental cost of disposal. We will get the net proceeds, then original cost less enhancement expenditure less incidental cost of acquisition. So incidental cost of disposals are anything that we did to sold our asset, for example, any marketing or anything. Similarly, incidental cost of acquisition, when we purchase our asset, we paid some legal cost, anything related to that one we can deduct. Let's see an example, this will be more clear. Colin bought some land for 35,000. He incurred legal cost of 400 pounds. So if we put this figure in our template, so original cost is 35,000 and incidental cost is 400 pounds. 2 years later, Colin sold the land for 49,000. So disposal is 49,000, and the cost of selling the land included land agency fees of 1,500 and 500 is legal fee. So 1,500 plus 500, 2,000 pound are incidental cost of disposal. So net proceed is 49 minus 2 is 47. So 47 minus 35K minus 400 is equal to gain is equal to 11,600. The next one is disposals between spouses and to charity. If an asset is transferred to a spouse or civil partner, then the transfer does not give rise to a capital gain. This is because the disposal proceeds are deemed to be exactly equal to the cost of the asset. This ensures that neither a gain nor a loss arises. The same rule applies for a disposal to charities. This is also called no gain, no loss transfer. This can be very useful for tax planning between spouses. Example, disposal between spouses. As we discussed, that disposal between spouses is no profit, no loss. If one partner this example we will look. If one partner is a high rate earner and the other one is a basic rate earner, and the high rate earner owns the property, yeah, and his property income is 12,000 each year, which is, and the worth of the property is 450K, and the original cost was 230K. Because Edward is a high rate taxpayer and there is a rent coming 12,000 pounds. So on this 12,000 pounds, he has to pay a 40% tax because he is a high earner. It is better if he transfer this property to her partner, to his wife Ellen, then this rent will be taxed at 20%. So her base cost for any future, so if Edward transfer the property to Ellen, the deemed disposal proceed would be 230,000. Yeah. And Edward would not make a gain or a loss. This will allow any future property income to be taxable on Ellen. Her base cost for any future disposal would be 230 rather than 450. Connected person. Where an asset is disposed of to a connected person at less than the market value, then disposal proceeds are deemed to be the market value. For example, who are the connected people? Parents, grandparents, and other lineal ancestors, including their spouses or civil partners, brothers and sisters, children, grandchildren, and other lineal descendants, business partners, lost their spouse, civil partner, and relatives. If the disposal of an asset to a connected person results in a loss, then the loss can only be offset against gains made when disposing of other assets to the same person. Annual exempt amount. When we calculate capital gain tax, first thing what we need to do is same like personal allowance. We have a 12,570 pound tax-free income. Similarly, for capital gain tax, there is a allowance of 12,300 pound, but it is 2020-21. No, it has been changed now. It will always be clear in a question on your exam whether the AE is available or not. Don't forget to deduct it when it is. So now come to the main question, how we will calculate the capital gain tax. Yeah. So capital gain tax, same like income tax rates, we have the basic rate taxpayer has to pay 20% and the high rate earner has to pay 40% and additional rate earner has to pay 45%. So for capital gain tax, the basic rate earner has to pay a 10% tax and the high rate earner has to pay a 20%. And if it is a property, in case of property, it is different. For basic rate, it is 18, and for high rate earner, it is 28%. Let's see an example and it will be more clear. Daniel has a chargeable gain of 16,700 pounds in 2020-21. His taxable income after the personal allowance for the tax year is 20,500. So how much gain he has is 16,700, and we will minus annual exempt amount, that is 12,300, and the capital gain tax we have to charge on 4,400. So because Daniel has a salary of 20,500 and the basic rate band is 37,500, so still Daniel has 17,000 pound under the basic rate band. So it means this 400 and 400 pound we need to multiply by 10%. So it is not 4,700, it is 4,400. So 4,400 multiplied by 10% should be 440. Let's see another example. Assuming Daniel above instead has a taxable income for the same tax year 33.5K, his remaining basic band will be 37.5 minus 33.5 is 4,000. And here, if you look, the amount subject to capital gain tax is 4,400. So it means the 4,000 pound will be subject at a 10%, and the remaining 400 pound, 440 pound subject at a 20%. So the total will be 440. It is not a, there is a mistake here. It should be 440. Let's talk about now the capital losses. A capital loss occurs when the disposal proceeds are lower than the original cost of the assets. So losses are dealt in a specific order. Must be offset against capital gains arising in the same tax year until the capital gain is zero. Note that this may mean that the AE for that tax year is lost. The loss cannot be restricted simply to take the gain down to the limit of the AE. Carry forward unused losses to offset against future capital gains. Key learning point. Capital losses cannot be carried back to an earlier tax year or set against income. Let's see an example. Karen has the following capital gains and losses. In 1920, Karen has a gain of 12K and a loss of 18. So the difference between 18 and 12 is 6,000 pound loss. Yeah. So gain is chargeable gain is 12, and capital losses is 12,000 pound. So because 12,000 we have used this one, we cannot use against this AEA. Yeah. So AEA in that case will be loss we cannot offset against the AEA. So the loss AEA will be loss for this tax year. So this 6,000 pound will be carried forward. And next year we got a profit of 4,000 pound. So from this 6,000 pound, the 4,000 pound we have utilized, and the remaining balance is 2,000 pound will be carried forward. The next one is part disposal. This is an important question. I remember I got this question as well in my exam. So it is possible that only part of an asset may be disposed of. Where this happens, it is necessary to calculate how much of the original purchase cost relate to the part disposed of, so that the chargeable gain can be calculated. The formula here is cost of the original asset multiplied by A divided by A plus B. So A is the value of the past disposal, and the B is the value of the remainder unsold. Let's see the example. So Lucy purchased 2 acres of building. Yeah. So the cost of the building was 30,000 pounds. Yeah. She sold bought of the land and she got 16,200 pounds. So we will put in a formula here. So 16,200 multiplied by 40,000, that is the remaining value of the land, and we will get 8,648. So she got 16,200 pounds by disposing of this property, this land, and so gain is 7,552. Note that the rest of the cost will be used when the rest of the land is sold. Another important topic, shatters. There is no AAT exam without this question. One of the most important topics. Shatters are tangible movable property, for example, picture or a table. A vesting shuttle is one that is expected to depreciate in value over time and has a life of less than 50 years. A vesting shuttle such as racehorse are exempt from capital gain tax. There is an exception for plant on which capital losses could be claimed. Non-vesting shuttle are treated as follows. There are different rules for shuttles. If the gross proceeds and the original cost do not exceed £6,000, then the shuttle is exempt. If the gross proceed and the original cost 6,000, then a normal gain or loss arises. In any other case, we have to apply this marginal rule. So instead of reading this marginal rule here, it is better if we understand this marginal rule through an example. And this is a must question in your exam. Okay, shuttles with proceeds in excess of £6,000. So if you look here, an antique desk was purchased at 4,950. So and sold for 8,400. Yeah. So disposal proceeds are 8,400. Original cost is 4,950, and the chargeable gain is 3,450. Now we need to apply a marginal rule. So marginal rule is disposal proceeds is 8,400 minus 6,000. Why we put it here 6,000? Because our proceeds are more than 6,000, so we need to compare with this figure and multiply by with 5 divided by 3 is equal to 4,000. So this figure 3,450 is less than this 4,000, so we need to use the less figure. Let's see another example. Again, shuttles with proceeds in excess of £6,000. Yeah. So here, disposal proceeds 6,500 and original cost is 4,950, gain is 1,550. Because proceeds are more than 6,000 £6,000 and cost is less than 6,000, we need to use the marginal rule. So if we marginal rule here we have applied, and if we compare this figure 1,550 with this 833, so 833 is lower figure, so this one we need to use. With two examples we have seen where the proceeds are more than 6,000. Let's see an example where cost exceeds £6,000. So here our deemed disposal proceeds are 6,000 and cost is 8,400. So in that case, there is a capital loss of 2,400. Because the original cost exceeds 6,000, however, the loss must be restricted. This is done by using deemed disposal proceed equal to 6,000. This is the end of our lecture, and in next lecture we will cover shares and bonus shares and right shares, the pool stuff. So this is the end of our lecture. If you have any question, please put on comments, and also like this channel and subscribe it. Thank you so much.